Well, welcome to our show today, the Jupiter Joe Money Show. And I want to talk about some unique, different types of retirement plans other than IRA, 401k, 403b, 457, whatever it may be called, SEP IRA. We're going to talk about NUA, net unrealized appreciation, which is a type of retirement plan for people who have stock options in a company that they work for. And we recently came across a few clients that have had this happen, so that's where we're going to bring it up. The other thing we're going to talk about is ESOP, employee, stock option plans, ownership plans. And we've done business with clients that have both of these type of plans, and they're unique and they're different, and they definitely warrant us taking the time to explain it to clients that we can help them with these type of plans and show them how to get the most out of it and not make a mistake. Because if you make a mistake with these two type of plans, you got real issues.
Well, I was just thinking about the one client that we had, this was a couple years back, and she had public stock and she was going to cash it out, take out the withdrawal, the full amount. And it was like $20,000 or $30,000 in taxes just for doing that one mistake. She didn't end up doing it, but.
Right. Because I showed her that she can roll over the money. Let's talk about this, folks. You're always going to be better to roll over your money wherever it is, unless it's NUA money. You do not want to do an NUA rollover. There's no such thing. Okay. You could roll over an NUA to an IRA, a traditional IRA, but if you do that, you're just going to have more taxes. The benefit of having NUA is that there's going to be less taxes for you.
Okay, so that's a win.
That's a win-win. Yeah. So we're going to talk about this a little bit, but that particular client, what I told her was, I said, look, if you put money away in a retirement plan, the whole benefit to a retirement plan is you're not paying tax for a long, long time. And I explained that if she took all the money, it's a completely taxable. You fall into a higher tax bracket. So why would you do that? And I explained to her that by putting all the money in a retirement plan and then paying herself out, she'll have more income. And I showed her the exact numbers, and she realized that it is better to always roll over your money.
Yes, and you can see the real dollars there.
There you go. So this NUA stuff is kind of complicated. Net unrealized appreciation. Okay. Bottom line is you work for a company like a Costco. I'll give you a couple of companies that do this: Costco, Amazon, Exxon, Microsoft, some of the big ones out there that actually do this NUA stuff, where they're giving you stock options in a company. You get to buy it at a discount, so to speak. And the benefit for the company is that they get to give you some stock at a discount, and it keeps you there as a worker, and you're going to work harder. You're incented to do better by the company, and then the company's incented because they're making more money on their stock, right?
Well, especially if you've been there for 30 or 40 years, that's going to add up real quick.
Yeah. The biggest problem with the NUA stuff is that you have to understand that there's a cost basis of how much money you actually put into the stock. Okay. So let's say you have $1 million portfolio with XYZ company that has NUA, and basically what they're going to do is they're going to have a cost basis. Let's say that cost basis out of $1 million is $200,000. That $200,000 is completely taxed as ordinary income tax when you take it. Okay. And so if you fall into a 24% tax bracket, you're going to pay 24% tax on that. Now listen, let me disclosure. I am not an accountant. I definitely highly recommend you go to an accountant that specializes in this kind of thing. And, we're going to take care of the rollover for you and how it works, okay, and how we can advise you on that. But the bottom line is whatever your cost basis is, that's what's going to be taxed as ordinary income. Anything over that is going to be capital gains, long-term capital gains, either 0, 15, or 20%, depending on what your income bracket is that year when you take it. The biggest problem people have with this is that you need to do it in one swoop. You need to do it one time, get it over with, and not be taxed again, or not have a continually rolling over stuff. You want to do it one time, and you can't roll over NUA into a 401k or another IRA because it just makes your whole account more taxable than it would be if you just pay the tax as NUA.
Right. So just listening to this is something you really shouldn't do DIY. You need
do
to
not
talk to an
do
expert.
it yourself, folks. And I know enough about it to get myself in and out of trouble. I've done a few of them. Recently, I had one that we did, and I just thought we'd bring it up to people because it's important that there are people out there that have NUA, and sometimes they get bogged down on it. One lady told me that a friend of hers just decided to cash it all in. and they're going to pay huge amounts of taxes. So don't make the mistakes like that, okay?
Yeah, you definitely need to get your best options. I think some people get hesitant, or it's, bogged down, too much information. You don't really know what to do.
Yeah.
So if you have questions about NUA, if you have questions about, some of these unique retirement plans like an ESOP, give Jupiter Joe a call. Go to jupiterjoe.com. You can book a free appointment over the phone or in our office here in Jupiter, and give us a call, 561-743-0999.
And sometimes it's as simple as just getting more information about it and let it sink in a little. I had a client recently, and it took us several interviews just to make sure that we were all on the same page, making sure that I understand it, they understand it, and even their advisors who they're dealing with, maybe as an accountant or whatever, they have to understand how it works. The next portion of unique retirement plans is ESOP.
Yes.
Employee stock option plans, ESOP. You'll see companies like Publix down here in South Florida, North Florida, wherever Florida, they're big with ESOP plans. And again, what it is an incentive program for employees to get stock options through the company at a discount or given to them so that they can have a retirement plan that it actually helps them make more money and gives them an opportunity to be part of the company and share in the wealth of the company, the growth. So if a company has a stock that's worth $10 when it's issued, and when they retire, it's worth 20. Well, they've had 100% appreciation. And the company makes money because they're basically giving stock. They get to write it off. And then you make money because of the appreciation. Okay. But again, ESOP is a unique plan. Now, this plan you can roll over to, you can either do a direct plan rollover or you can do an indirect rollover where you roll it over to another IRA, a traditional IRA. Okay. And you want to make sure you do the right transfer so that you do not get taxed 20% withholding or 10% withholding. And we've done several of these in the last few years with Publix employees. And Publix employees are very nice. I don't know if you work with you've worked with a few of our clients.
Nice.
Very nice people, as any of our clients. For some reason, we have really good clients and nice people, right?
We do.
We really do. And you just don't want to make mistakes with this either. And that's why I'm bringing this stuff up. ESOP, it sounds, God, I got to read it myself. ESOP. I mean, I know what it is, but when you start getting down to the technical stuff, NUA, it sounds complicated. All it is it's a unique, retirement plan that comes with a unique set of rules that the IRS has created, and you better know them, or if you don't know them, it's going to cost you a lot of money, right?
Exactly.
And we're going to help you get through it, and that's the bottom line with this stuff.
So if you're just tuning in, this is the Jupiter Joe Money Show. We come to you each and every week on Wednesdays and Thursdays at 6 p.m. and also on Saturday mornings at 7:30 a.m. You can actually see us on YouTube. So make sure you go to our YouTube channel, the Jupiter Joe Money Show, and you can see us live here in the studio at our office in Jupiter. So check us out there.
There you go. Let's talk about what you're going to talk about today, because I think we're going to kind of transition this program into maybe one large program instead of two small ones. If that makes sense.
Yeah. So I did my show. You had updated the intro song to the Jupiter Joe Money Show.
Oh, Celebrate.
Yes.
Rare Earth. I love Rare Earth, by the way. They're a great band, 70s band, and two of my favorite songs. And but what happened was I was using Get Ready, and then all of a sudden the other day I was listening to Celebrate, and I go, oh my God, that's got to be our new song.
It's a perfect song. It's
I love
upbeat, it's optimistic. And so this song, it inspired me for today's show.
Oh, cool.
So I just want to celebrate retirement.
Okay.
So, the greatest success is simply getting to live another day and being in the moment. And I think, a lot of people, they forget how hard, they know how hard they work, but they forget sometimes how to enjoy themselves. And I think, we see a lot of clients come in and they have less worry when they do meet with you and they are able to retire and they have a specific amount of income coming in for the rest of their life, where they're just finally able to enjoy and have that relief. And that's what I've personally seen over the last 4 years working with you.
So it's funny. I did not know you were going to talk about this today, right? Because I wasn't in the office all day. I was out seeing clients and doing a couple of things personally. But what's interesting, I had no idea we were going to talk about this. And I just got a phone call. I had an 11 o'clock phone call today. And I would encourage anybody that's listening, you can give me a phone call sometimes. And that's sometimes a good intro for you. You don't have to come in the office and we can chat on the phone and I can see if I can actually help you. And it's funny, these people are up in Orlando area and they said, hey, Joe, we need X number of dollars per month, which a lot of clients call and actually say, and they need X number of dollars a month. And then when we were done with the conversation, which took about an hour, the wife said to me, Joe, after you run all these numbers, can you run another number? I said, what's that number? She said, I need to know what extra money we're going to have so we can travel. So, it's one thing to have enough money just to retire and pay your bills. It's another thing to have enough money to enjoy life. And I said to her, that's the epitome of what I do. You're going to have your guaranteed numbers coming in, Social Security. This gentleman happens to have a pension, and he'll have an annuity that will pay him a specific amount of money per month. And then she wants some extra money for travel. That's what retirement should be about. So celebrating here is a good thing. I like it.
Exactly. Yeah, I liked it too. And, one of the lyrics in the song, I Just Want to Celebrate by Rare Earth, they say, don't let it all get you down. No, don't let it turn you around and around. So, I interpret that like, life can be heavy at times, you're always going to get through it. And having that peace of mind, when it comes to money, and deciding whether or not to retire is so important. And you really have to be on the same page with your spouse. How much money do you need coming in to pay your bills and to be able to live?
True.
So
Very true.
Yeah. And, clients always ask, they say, how much will this cost to do this rollover? How much am I going to pay in taxes if I do this rollover or transfer?
Well, that was the question before this question about traveling. After she realized that we were working together, then she said to me, well, by the way, how much is this costing us? And I said, nothing. I said, we get paid, we get compensated in a commission form from the companies, and they pay us out of their pocket, not yours. So you don't have to worry about paying, exorbitant fees. And then she said, well, we were thinking about working with a brokerage account, brokerage advisor. And I said, you could do that. I said, and a couple things you can't do. You can't guarantee how much income you're going to have. And by the way, you're going to pay anywhere from 1.5% to 2%. She goes, no, it's 2%. He already told us. And I said, well, that's and it was $1 million deal. And she said to me, I said, that's $20,000 a year. I said, over the next 10 years, that's a lot of money. It's $200,000. Now, what is somebody worth? Is somebody really worth $200,000 to push a few buttons and put you in the stock market? You can do that yourself for free on Fidelity.com, or you can go to Charles Schwab and set up an account for free. Now, you might say, well, I don't know about this. Well, if it's going to cost you $200,000, you need to learn, Or you can do an annuity where it doesn't cost you anything to open up, and it will guarantee you income for the rest of your life. And that's really what we do.
Right. And if you have questions, if you want to talk to Joe, go to jupiterjoe.com. Give Jupiter Joe a call, 561-743-0999.
I think that's an interesting point you just brought up. Give us a try, because like these people, they're up in Orlando, we're down in Jupiter. And she said to us, or he said, the husband said, we've been shopping around. We've spoke to several financial people, and we've gotten a lot of different answers. And that's the truth of the matter. You are going to get a lot of different answers out there. The right ones, though, are what you're looking for. The right answers. Isn't that really what it's about?
Definitely. And I, when I was growing up with, I have a twin brother, and we've got Dana, my younger sister, you'd always say, Jenny, you guys, there's no dumb questions.
It's true.
And it's so important, because if you don't know something, you don't know.
Yeah. Well, my whole life has been a learning process in the business I'm in. When I was 21, I got in this business, and I'll be honest, I knew nothing, nothing. And I realized early on that the only way you're going to get better at what you do is if you educate yourself about what you're looking for to advance yourself. And this business and this sector of financial planning, retirement planning, is so important to people, and there's too many different answers. I really believe that, and I try to simplify it for folks. You put a lump sum of money in, you get an income stream that lasts you for the rest of your life and your spouse for the rest of your life, and if anything's left over, it goes to your family. And you're guaranteeing yourself an income stream that you cannot outlive. Oh, by the way, if you get sick, it doubles your income for 5 years. That's basically the epitome of what we do, you know?
And a lot of people, they've said they you don't want to disinherit your family. Can you
Nobody
talk about
does.
that?
Nobody wants to disinherit. Look, let's put this online. In the old days, there literally was a disinheritance with annuities. If you bought the wrong annuity years and years ago, 20 years ago, 30 years ago, that could happen. Those days are over. But if you're doing an income annuity and your goal is income for life for you and your spouse, there's probably not going to be too much left over for your kids. Now, you guys understand that I have these annuities, and me and mom have already said, hey, this is our spend down money. You have to have spend down money, and then you have to have money you're passing over to your family. And you have to know this up front. Now, if you want to leave everything to your kids, then do an interest-only option, which means you're never touching your principal, and you're only living off the interest. You won't live as good a life, but you'll have interest only for the rest of your life. Now, we can do that with you. We can do that not with all your money, but some of your money. A lot of times we'll split it up 50-50. We can accomplish what you want. You have to tell me your goals. We're going to disclose this, which way to go when we talk. And that's what's imperative to what's important to you.
And some people like the laddering, where they have a 3-year fixed annuity and a 5-year fixed annuity, and they're never touching the principal a lot of the times.
I just did that yesterday with a client. We did a 3-year for $10,000, and we did a 5-year for $30,000-$40,000, and then she had a $15,000 Roth that she wants growth on. That's 3 different annuities. 3-year, 5-year, and an index annuity. These annuities accomplish different things, and there are different companies that accomplish different things. Fortunately, we have access to every major carrier out there, literally. Okay, I mean, there might be a couple here or there that we don't deal with, but generally speaking, we're going to have access to all the major players in the insurance business regarding annuities, or life insurance for that matter, because insurance and life insurance and annuities do go hand in hand with a lot of these companies. But having said that, a lot of people say to me, well, we want New York Life. And I'll say, well, New York Life is a great company, and I know of them. They're probably top 8-10 companies in America. However, they don't pay as well as a smaller company does. You know why? Because they have the business and they have the name. They're going to pay you less because you're dealing with New York Life. Now, as long as you're okay with that, I'm fine with that. We'll give you New York Life. But don't come back to me and say, hey, you could have given me XYZ. They paid more. We're going to show you XYZ, ABC, New York Life, whoever the major carriers are. You make a decision. If you want to get less money, fine. The way I operate with my money, I always want to get the most money, the most bang for your buck. Okay. I don't know. When you go buy a car, do you want to pay more or you want to pay less?
Less.
There you go. When you have an annuity and it's an income annuity or a fixed interest annuity, do you want to get more or you want to get less?
More.
There you go. This is simple 101 basics, but for some reason, people get things in their head and it sticks there. Now, I get that problem sometimes myself.
You do.
But you got to shake your head and get rid of it. You know what I mean?
Well, that's a perfect opportunity for our listeners to give you a call. Jupiter Joe Thomas, retirement expert, over 25 years down here in South Florida, in Jupiter. So go to jupiterjoe.com.